Today we are going to look at a particular system which is based on Fibonacci. Now we have already webinars on Fibonacci support, resistance, Fibonacci numbers, ratios, all those things. But we will just fine tune that approach because we would like to know from where to where we should take the Fibonacci ratios or numbers, or know which are the important points which we should use it for Fibonacci, and also whether we can use Fibonacci support resistance for intraday purposes also. So Fibonacci support resistance along with important pivot points itself will give a very clear indication of trading methodology. But nevertheless, no, it is better to use it along with one or two other systems, which could be probably using it along with a moving average, or probably whichever system, that super trend or whichever system that you would like to use, you can combine that and use this with Fibonacci. Otherwise, those who want to do it as a standalone tool also can use Fibonacci supports and resistances or the ratios. So in Fibonacci, we have seen percentages, we have seen the ratios, and also we have seen the numbers. So whichever is comfortable for you, you can use that. Now numbers, just to take you back to the numbers that we have on Fibonacci, we know that it just varies from 1 to 3, 5, 8, 13, 21, 34, 55, like that. So it goes on eternally. And in Fibonacci right now, because we are having 5 digits as far as Nifty is concerned, so probably we will be interested at some levels of something like from 89, 144, 233, 377, 610, 987. So these are the numbers where probably we may be using it in Nifty because of its higher digits. Okay, so if it is a lower number where probably it's trading in hundreds, any stock will be using these type of numbers. Now this is one. Second thing is that we can use the difference between one important pivot and another pivot, and then use our calculation per this one, that is the ratios, which we use normally, the 23.5%, then 38.6, then of course 50% is not a Fibonacci but very commonly used, then of course the 61.8. so these are the two important ratios. Then 76.5, that's one of the last important ratio of retracement. So normally these things are used. So either you go for, or you can use the percentages like 1.3%, 2.1%, 3.4%, 5.5%. so these are the ratios also, percentages which we can use. So normally the more common thing in Fibonacci that is used are the calculate the difference between some two important pivots, and with the help of the ratios you find out the support and resistance level. So that's the most commonly used. So what we will now try to do is that we will look at how exactly we should assess how the trend change points using the Fibonacci, and whether we can develop a system based only on Fibonacci. So this is the objective of today's webinar. So before we come before we try to draw some conclusions regarding what type of system parameters that we can use for Fibonacci, we will just look at the Nifty, Bank Nifty, and some stocks in a normal Fibonacci ratio, this one, and then look at how we can fine tune that into a system itself. So right now, let's say this is the Fibonacci number. Fibonacci. This is the Nifty chart. Now we have seen a big fall in this is a daily chart. So we have seen a big fall from 18,114 recently to something like a 15,700 levels, right? So 15,735. 15,735. So if you look at this number, this is 18,115 minus 15,735. You got something like 2,380, and it is very closer to one of the important Fibonacci numbers. So now we'll look at the Fibonacci numbers itself. If you okay, we mentioned that 610 higher numbers 987. So 610 plus 987, we have got 159 round, right? 987 plus 610. 1597, and then 2597, so 2000 plus 987, 2584. So this is 18,115 minus 2,584. If you take that, should come to 15,531. But Nifty came closer to 15,735. So 15,531 would have been a very good numbers. But nevertheless, we'll leave it there for the time being. So what we normally attempt to do is that now we look at the ratios. Okay, that is more. That is normally more commonly used. Now, see, let us say this is the Fibonacci important levels. To let's say we draw this from this level. So this is the Fibonacci. This is from the 18,114 fall to this particular level, that is 15,800. Normally the 38.2% retracement is the most important retracement. So if you look at it, it came right up to the 38.2%, that is the 16,639. It exceeded that, and then it started to fall and took support closer to 16,293. This is 16,293. Right, 16,293. Now this 38.2% would have been very clearly applicable if we had gone. The reason why we are looking at some sort of failures also, exactly 38 point, is to understand how to develop a system. Now let's go to the big chart, which is the monthly chart. So now let's draw the Fibonacci for this level, from this level. So if you see 16,782, 38.2% is 16,782, and 23.6% is 16,357. So please keep this in mind: 16,357 and 16,782. 16,782, and the low that we have drawn is from 15,671. That is the low, right? The big low is 15,671. So the 23.5% retracement is 16,357. 16,357. So this 23.5%, now 15,061, just measure this difference: 16,357 minus 15,671. This is 686 rupees. This is 686 rupees, right? So now it has crossed that particular level, that is 686, that is 16,357 has been crossed, right? Once it has crossed the 16,357, then it went up to 16,785, which is exactly the 38.2% retracement, right? So we have already said that in case, if there is one support level which is breached or one resistance level is breached, then the next level will become the important support level below which the trend will change. That is, if the Fibonacci has crossed 50% retracement, then in that case, we should look towards the 38.6% retracement. That is, if it has crossed decisively that 50% retracement. But normally, if it crosses 38.6% retracement, then in that case, we should put the last one which came. That is, if it touches 50% retracement, we should keep 23.6% retracement as the stop loss and for trend change. If it goes to 61.8%, then we should keep 38.2% retracement as the thing. So, generally speaking, that we should keep at this 23.5% initial, which has been broken, as the important place, which or important number, which has to be subtracted again from a particular top in order to arrive at a trend change point. Now, when I say this, it is 687 points, right? So 686 points. Now the market went up to 16,795, right? 16,795 minus 687. So this is the trend change point, or approximately keep it as 700 points. So 16,000 this will be 95 or 16,100. This is the place where we can see below which we will have the trend again change. Till this time that 16,100 is not crossed, there is a chance for Nifty to go up and down and come back. Now let's go back to the chart. Now I told you that 16,100 is a very important place. We will go to the daily chart now. Right. So overly chart. So let's look at this chart now. Now the last low that came is 16,240. This is an hourly chart, but we are just trying to explain this. 16,100 is the level which we talked about as a place where the likely trend change can take place, right? So the big bottom that we saw recently was the 15,000. This place. So let's draw the Fibonacci from this to this top. We have the 16,260 is the 50% retracement which came today, and 61.8% if you see 16,133. 16,133. We talked about 16,100. So the 61.8% retracement from any one level to another level is a very important place that has to be taken off before now we can call about a trend change in the system. So a 61.8% from this level to that level, which comes to 16,133. And same thing that we talked about, the 16,100, which is the 687 points, which is detected from the recent top. That particular place has to change for us in order to come to a conclusion regarding the profitability of the system, okay, or a trend change. Now, right now we got 16,545 in this case, 16,545, 16,387, 16,260 and all. Okay. So today we saw, now let us look at those. We already talked about that there has been a trend change because of a 23.5% retracement cut, which came at 16,350 to 400, whatever levels it is. Now we are saying that this move which took place from 15,700 to 16,800 can be called off only when it starts breaking 16,133 or 16,100. Okay. Now within that, how do you trade this market? So that is the question right now. So we now know that let me, okay. So now we see the situation where it is like this. Now we know that 16,100 till 16,100 is not cut. Okay. We should be looking towards some sort of a buy till 16,100 is not cut. Now in this case we see the first one which was cut is 16,799, 16,546 here. So what is the difference there in this 23.56% retracement? It is 250 points, approximately 250 points. So anything from the low till this 250 point. Now once it broke that 16,546, we should be clear that till 250 points is broken, we should be in a short level. So let's say this particular day, it went up to a low which was 16,347. Now 16,514. So it is less than what exactly the 240 points. So here today it came down to 16,243. So today we see that probably it could have 16,795. I told you 16,795 minus 16,546, 249. So 249, let's add to 16,243. 16,492, and that is where it stood, right? So today it exactly went up to 16,492 and has stopped, and it has stopped there. So now we have to see whether there is a shift in trend. There's a likely shift in trend, whether if it comes lower. So now this is a very important crux, and if it starts moving above this place, then in that case, no, we should look towards being on the long side of the market for time being. At least we should be in the long side of the market at least for the time being. And also it would have meant a single day up day break, and this is looks to be looks to be a completely engulfing pattern. So on the candlestick pattern also it looks good. So based on all these things, we should be looking towards some sort of a buy in case of 16,492 is cut. Okay, this is the system. This is based on the Fibonacci system. Now at the same time, now because we are dwelling on various aspects in order to work out a particular system, so don't please do not mistake me as if it is confusing. Now let's look at the pivot points. In the pivot point, if you see, this is a lower pivot and this is a lower pivot. So we have already got classic down, that is lower bottom. We have got a lower bottom right now. So what we need is a lower top. Okay. So what we need to be careful is, if there is a rally, and then if there is a day which is cut, if one particular day low is cut, okay, again, now let's say it goes up a little bit, and then it starts cutting any one day low, then in this case we should be very careful from the point of a likely reversal. Now because I told you that 16,100 is the 133 or 130 is a very important level, below which the trend will completely change, but by the time you would have lost 685 points from the top. So there is a chance that already it might have come to a oversold position. There can be bounce up and down, so we could be into a problem. So the best way to attack that right now will be this, that is, allow this. Now it has come down below this, so probably there is a chance that it can head towards 16,000, this particular high or the close, 16,660. 16,660 is possible. From where there is a chance of a downtrend resuming. Now let's look at this place and this place. Let's draw the Fibonacci for this. So if you see the 61 point, the 50% retracement is coming at 16,513, and the 61.8% is 16,577, 78.6% 16,699. So we see chances that when it exceeds 16,575, between 16,575 and 16,675, there is a chance that probably the rally which started from today can fizzle out, and then it can start falling. So now let's look at this. Now we'll remove this. Now let's look at the trend line. Okay, so this is the trend line now, and let's put it this. Okay, here. So now tomorrow, let's say it starts a rally and it goes up to this place, which is 16,648. I think there's a reasonable chance where it can start falling from 16,648. Then let's look at the levels which is beyond that. The next day it could be 16,060. So very closer to 16,640-50 levels. Very likely chance that there can be some sort of a pressure in the market. If it starts to break that place decisively, 16,660, 670 levels, we could be looking towards a new up move. If it doesn't happen, then it goes up to that level. Then if it starts to cut below any particular low, okay, any particular day's low, then I think we are looking at a bigger fall. And how much the bigger fall will happen? I told you that the option volatility for is a reasonable level to look at what can happen within a month or so. Based on that, probably right now it could be let us say a particular month option. It is now we are looking at a let us say we look at the average range, which will give you some indication about the so you look at the average true range. So for a month or so, this will be 1150. So we'll go back to that day. So 1150 is the one single month's average range is high to low. So that means if it goes to 16,650 and starts falling, today is June 9th or 10th, around this. So by July 9th or 10th, there is a chance that it can come back to 15,650. There's 1,100 points fall. It can take it back to 15,650. So there is a very highly likely chance of a profit being made. Either way, so you need to work out this particular place. That is 16,650. Watch out for this level. When it goes up to that, and then if it starts cutting any particular day's low, then there is a reasonable chance that if it starts falling, then it can go back to 15,650 levels within a month. Otherwise, if it starts cutting above that, that is no, let us say it goes up to 16,650 or so, and then it starts to cut any particular day's low, slightly comes down, and then starts to go up above that, then we need to revise our opinion, calling for this low of 16,250 levels, and then add another 1,100 levels, so expecting something like a 17,250 within a month. So either there is a good chance that we should see one of this level, very likely chance, that is 17,250 or 15,650 or 15,650. So right now it's around 16,500 levels or so, right? So let's look at this particular place from where the straddle or any strategy will work out. Okay, now we have looked at the Fibonacci, we have looked at the trend points also. So let's look at the NSE option. NSE option. So this is 9th of June. We have a possibility only till end of the, I think the tomorrow we have 30th June. So ideally we would like to go for 7th July data. But let's look at the 30th June. What is the price? 30th June, it goes 284 plus 272, right? 16,500, where it is right now purged. 272 plus 284. So that means plus 284, we have got 556. So either it comes below 16,000 or 17,000. That's what it says. I think it's a very, very reasonable chance that there is a good chance that we may make profit in this deal, because we're expecting something like either 15,650 to come or even 17,200 to come. But much on the higher side, that is, if it's going to give something like a 17,000, I don't think so. The call side is going to be that greatly advantageous. Call side is not going to be that advantageous. Okay, because the break-even side is not working out much. It may give some 200 rupees profit or so. So not much of a great potential as far as the call side profit is concerned. So we may have to look towards, if you want to express your opinion on the upside, then there you have to do it differently. But on the put side, I think it is 275 rupees right now. I think at 16,600, it is worthwhile to take the particular put. Okay. And then if it starts to move above 16,700 or so, you can cut off the position. So around 16,600, 16,650 levels, please take a 16,500 put. But if it starts to go above 16,700, you can come out of the position. You can come out of the position with a small stop loss. So that is the better idea, rather than to put in a complete straddle and lose something on the upside, where the upside potential is going to be rather a little bit limited, because the call and put together, the break even comes to 17,000 on the upside. Maybe 17,150, 17,200 only will come. I think beyond that, I think the potential for on the upside is not much. So we have to be careful about it. So to some extent, we are able to get an impression about with the help of the Fibonacci, we have drawn a big trend change point, which is the 16,100 levels. Okay. Now the normal Fibonacci levels tells us that probably 16,482, if it is cut, there is a possibility of a rally, a little bit of rally that can take place. But right now we have seen there is a lower bottom has been formed. Since a lower bottom has been formed, I think we need to look this Fibonacci from the angle of a bearish position rather than looking at a bullish position, because now we are trying to combine the pivot points as well as the Fibonacci. Now we have got a lower bottom in the daily chart, so which means that any rally, okay, should probably get resisted at some higher Fibonacci. So we should be looking towards the sell side. We should be looking more towards the sell side position. So when we looking at the sell side position, we should be now going back to the chart. Okay. So now where do we, from the normal pivot angle, now see today's high is greater than this particular this is a close, and today we have got a higher close. So we need now a close which is below 16,356. So any close which is below 16,356 means that the trend is changing. Okay, Okay, but if it goes below 16,350, suppose if it doesn't go up to 16,610 or 615, but there is a close which is going to come below 16,350 levels. Okay, 16,350 levels. Then in that case we should be looking towards a short position. We should be looking towards a short position immediately. So a close below 16,356 is going to be important. And here if you see this close which came, this is 16,522. So right now we are looking at a close either 16,522, whether it will go through, or the highest close that we have got till now is this, right, which is 16,660. So a close 16,660 and 16,522 are important from the angle of daily plus 16,522, 16,660. So I doubt very much whether this is going to be crossed. So it can just rally somewhere above 16,522, right? But on the same day, the close can be below 16,522. So any day if the rally is above 16,522 and it goes up, be careful. On that day, look towards look towards some way to get into a short position. Okay, and there's a good chance that it can close below 16,522. But more important level is this. So 16,577 is the 61.8% retracement. So keep an eye on this. So now if you see the Fibonacci levels back. Okay. So the main problem right now which is happening as far as Nifty is concerned is the extreme amount of gap up, gap downs, which is literally putting everybody in trouble as far as any trading calls is concerned. Because if you look at it straight away, this is a low, this is a gap down. This you look at it, it's a straight away gap up. So now this gap up, once it started to get filled up, then in that case, we can look towards going short, which I told you. But the same day there was an RBI credit policy, and immediately we started seeing a spike above that. And today, if you see, there was I think there was a gap down. So here it was this gap got closed. So this was 330. Yeah. So this is close was 335, and it went up to 336.84, and once it started to move above the gap up, then it started to literally take off. Here it was again a gap up, so this position was not closed, but this gap it got closed, and we looked at the short position here. So the gaps itself can be used for trading, but here you see it just kills us a lot of things. See, for example, here is a gap. Okay, so any open positions suffer because of this. So here it was a gap, and this particular position, once it got filled up, then it had a decent chance to move. But on the same day, after going up a little bit, it went up to till 2 o'clock. It was on the upside. Then so it just got closed without breaking this low, but nevertheless it did not succeed much. So there was the gap got closed, but it didn't happen much. So here it was this place, it was a gap on this day. So I think this gap got closed somewhere here. So the gaps play important point, but at the same time we see the trend is like this. That is the whipsaws that take place. So here it just happened, then again it took off. So here the gap got closed, but at least luckily there was an uptrend after this. So you can use either for intraday trading, you can use the gaps, or probably the opening range breakout, which we have already explained. So a 15 minutes opening range breakout today was successful. Today, if you see, the 15 minute opening range breakout was successful. Okay, yesterday, if you look at it, this is also a 15 minutes range breakout. Okay, more or less little successful except for this. So here is a 15 minutes range breakout. So this was also a little bit successful. So no, we didn't have the position back there. So 15 minutes range breakout also can be used in here. If you see this particular day, this was a 15 minutes range breakout, and but we saw this position being closed at some place or the other. So some days it can have a stop loss triggered if the same volatility is very high. Some days we get a full profit here. This is the 15 minutes range breakout, got a good amount of profit and carried it forward. So I think we need to define ourselves. The 15 minutes range breakout is also helpful, but at the same time there can always be failures as well as 15 minutes range breakout also. That is one, and gaps also is a important place, but nevertheless we can use the gaps also in a very studious manner. So what we are trying to imply upon is this, or these points, that is the overall Fibonacci support resistance points are very important, but that has to be used along with the overall trend situation which we see in terms of the pivot point support breakout that has taken place. Now in the case of Nifty, we have seen a lower top, lower bottom in the daily chart, which means that we should be looking more towards going on the shorter side of the market. Should be going towards shorter side of the market. Okay. Now we will look at the Bank Nifty. We will also look at the S&P for understanding purposes. We will look at it. So this is let's look at this is Bank Nifty. So we will look at the 1 hour chart. We'll look at the daily chart first to know. In daily chart, if you see, the same thing is happening here in Bank Nifty, lower top, lower bottoms, but we have this particular high has to be broken. This is the 35,449. So this high has to be broken for us to get back into a long mode again. And if you look at the overall relative strength between Bank Nifty and Nifty, Bank Nifty looks to be slightly strong, which we have highlighted earlier. So right now we see the situation where the Bank Nifty has closed above this particular low close. So that means probably we need a close right now. Since we can go long, we could have gone long today. Today is a place where we could have gone long, keeping this particular close as a stop loss. That is 34,996 daily close as a stop loss. 34,996 is a stop loss, okay, on a close basis, because today's close is better. So what is it that we need to monitor? Is this, say today this particular close. Now we need a we need to monitor this close, which is 35,310. Are we in a position to break 35,310 further? That is very important. So 35,310 or a break which is below this close, which is the 34,996, right? So this is this is 34,996. This is 34,946. So we need a close right now which is 34,946. So right now Bank Nifty, to go short we need 34,946. So today on close basis we should have got out of the Bank Nifty short position. We should have got out of the Bank Nifty short position, which probably we would have created. So because this was the once this close was there, okay, so this was a close which is below this close, so probably we could have gone short somewhere on this day. We could have gone short, okay, and that particular thing will now get removed only on today's close. On today's close we could have got this removed. So that way, if you look at it, Bank Nifty on a Fibonacci chart, also came very close to the 50% retracement, and so this is the 23.5 where it fell, went up to 38.6% retracement and fell closer to the 50%, but it has not cut below the 50%. More or less we should be looking towards, once it starts to break this particular close basis, that is 35,340, 310 to 350 levels, then we should be looking towards some sort of an upward rally again. Okay. So this is the basis on which we can adopt our strategy. And overall Bank Nifty, we will look at the big chart. This is the so Bank Nifty, the break was 34,423. That is the 23.5% retracement of the big move that happened. So always you will see some sort of a support coming closer to this, some sort of a resistance coming closer to this. Okay, so these are the two important levels right now. This particular level is quite important, and then after that, if there's rally, then probably we could see slightly heading towards the 37,000. But we have to see so much of resistances are in between, so we have to see how it functions closer to the 35,825 where it has found its resistance. So right now, based on the Fibonacci support levels, resistance levels, on a smaller time frame with a smaller this one, that is, instead of a bigger pivot points, we are taking a smaller one. So this is the so this was one important high basis win. So probably we could be having some sort of a resistance tomorrow closer to 35,213. So today it went up to 35,085. So 35,213 is one area, and then 35,383 is one area. So 35,383 levels we have to look towards, and we should keep at this place a stop loss which is above this particular pivot high, or probably this particular close. So these are the two important places which has to be monitored now for Bank Nifty. And if it again starts cutting on a close basis below this particular close, then we should be looking towards again a short position. So Bank Nifty right now is slightly better and a little more tradable on the long side compared to Nifty. And Nifty, we have to be very careful about the 16,650 levels. So we will now look at some stocks. also. Of course, we will carry forward the same discussion even tomorrow. And before that, we go to the international market just to understand the same thing. So now, the international market, this is also a daily chart, and we look at the big chart first, monthly chart. The monthly chart definitely on the downside. That is why I'm saying that when it's on the downside, we should use Fibonacci towards going short levels. So now let's say which level we should go for short. So now let's say this is 38 point. Now if you see exactly, it came up to 38.2% retracement. That is 41.89 is the exact 38.2% retracement. And it has right now it is struggling closer to 41.89, right? So last month it went up to 43.08, 43.07, and this month if you see it is suffering closer to 41.89. So since last month low is also ducked below this particular low, we should be expecting that probably this 41.89, 41.90 is going to be a very important level of resistance as far as S&P is concerned. So for this right now, probably we should expect a fall which could be below 40.40. This is the 23.5% retracement of the entire move. Now that has to be cut. That has to be cut. Okay, for us to look towards on the shorter side. So we look at the daily chart right now. In this, so based on this daily chart, so now of course in the case of S&P right now we should be looking towards this particular close has been taken off, so probably now we should be looking towards this particular close. So if it's going to go below this close on any day, that is below 40.88, if there is a close which is below 40.88, then we should be probably looking towards exiting S&P long position, which can then carry it down much to lower levels, probably carrying it back to this 39.74 levels, 39.74, 39.80 levels is possible. That is where the Nifty also is likely to wobble. That is why we are saying that if it starts going up to 16,600 and look towards reversing, then in that case you be careful about it. So we will look at the stocks and all tomorrow. Stocks, we will look at the same thing. We will apply the same thing as far as gold and other commodities as well as concerned. So the overall thing that we are now talking about is this trend. So you can identify with pivot points: higher tops, higher bottoms, lower top, lower bottoms. With the help of Fibonacci, look towards the levels where we should go short or long or short using Fibonacci levels. Long or short using Fibonacci levels. Now you can use either the ratios or the numbers. Now we have seen 16,243, right? So let us say 16,243 is what the low we saw, and it has gone up now by 233 points, is 16,476. So the first support now will come at 16,243 plus 144. So tomorrow the first support, if you see, will come at 16,387. So first support now 16,387. How do we arrive? 16,243 plus 144. 16,243 plus 144, so 16,387. Now it has gone to the next level, which is 16,243 plus 233, 16,476. So it has gone to this level. Since it has gone to this level, we can use this particular level now itself as a stop loss, 16,387. So if it starts to fall below 16,387, we can be looking towards being on the short side, even on an intraday basis. Okay, even on an intraday basis. So that way, if you look at from the same thing, 16,795 it was. Okay, so let's say minus 144. This is 16,651. Okay, then minus 233, 16,795 minus 233, 16,562. Then 16,795 minus 377, 16,418. Then 16,795 minus 610, 16,185. So these are the support points. Now it came up to 16,243. It didn't come up to 16,418. But it has gone below 16,000. If you say it has gone below 16,418, right? These are the points that we have taken. So it has gone below 16,418, and the next level was 16,184, 185. So these are quite a big gap. The gap is substantial. So 16,418. From there, you can, if you want, you can use minus 144, because 16,418 minus 16,185 is something like 233 points. So what you can do is that you, from this level, you can use a slightly lower thing, so that you can use 55, 89, 144 and all for between this level. So 16,418 minus 55, 16,363. So this is another support level. You can just see in the chart itself. 89, then 16,418 minus 89, 16,329. Okay, then 16,418 minus 144, 16,274. So these are the levels which saw. So 16,242, 243 it went. So once it went below 16,274, you could have kept 16,329, 330 as a place where you could have gone long, keeping this particular level as a stop loss. So once it started cutting 16,360, you could have kept this particular thing as a stop loss. Once it went above 16,418, you could have kept this as a stop loss. Now 16,418 is there, and then now it's 16,562. So whichever one you want to keep it, you can keep it. Now this is 16,418. So 16,418. After that, no, you get between 16,418 and 562. If you feel it's quite slightly bigger level, then you can keep another 55 points. 16,000 this. So they'll come to 16,473. Then 89 points. 16,418 plus 89. 16,507. Okay, then probably 16,562. So you can keep these levels also, this one. So it all depends on what gap you would like to keep, okay. So and then work out a Fibonacci, and then just keep whichever gap that you want as the important support and resistance. That also you can do even for intraday trading. We will expand this subject tomorrow and then come out some conclusion regarding how to develop the Fibonacci trading system. So if you have any questions now, please ask. Thank you. Thanks for your participation. See you tomorrow. Thank you.